Hello, welcome to the European Open Briefing for Thursday, September the 28th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we finally heard about Donald Trump's tax plans yesterday. The much-awaited plans included large tax reductions for both corporations and individuals. This drove U.S. Treasury yields higher, as well as a decline in gold prices, and we saw the dollar extending this week's gains, rising above the 113 level against the yen. In other currencies, the pound appears for the time being to have halted its decline against the dollar after hitting a two-week low. We did have the CBI retail spending data, which came in above expectations, and we have a speech coming up by Bank of England Governor Mark Carney, as well as Prime Minister Theresa May. The Kiwi fell after the RBNZ held interest rates unchanged as expected, but they did lower their growth outlook, while the Canadian dollar was hurt by not so hawkish comments by the Bank of Canada Governor Stephen Poloz, who gave a speech yesterday. So let's start with the dollar. We can see here in the daily chart, dollar yen has been climbing since around about the 10th of September. It's currently it has slipped just below the 113 level. It did reach a 2.5 months high of 113.25 yesterday. The dollar index hit a 6-week high of 93.66 earlier today, and this comes on the back of President Trump's plans to overhaul the US tax code. He proposes a corporation tax of 20%. That would be down from the current 35%. He also wants to reduce the number of income tax brackets from the current 7 to just 3. He's also proposing a one-off repatriation tax to encourage US companies to bring back their cash reserves held overseas into the US. And if that was to be approved and it works, it would potentially lead to strong demand for the US dollar. So that's why we saw that big gains in the US dollar yesterday. We also had strong data out of the US durable goods orders came in above expectations, rising by 1.7% month-on-month in August versus forecast of 1%. Looking at treasury yields and gold, we can see the 10-year yields have shot up over the past 2 days, whereas gold has slumped lower. Gold fell to a 6-week low of $1,277 an ounce, whereas we saw the 10-year yields rising to a 2.5 months high of 2.359%. The shorter term yields, the 2-year treasury notes, climbed to a 9-year high of 1.499%. So the tax cuts not only raise the expectations of further rate hikes by the Fed later this year and as well as in the coming year as well, but also it does raise concerns about the US deficit in the longer run, and that's why we're seeing both short-term and long-term US Treasury yields rise higher after the tax cut plans. But it's too early to say whether or not those will be approved, and even if they do get approved, they could potentially be not quite as stimulative as the ones being proposed by President Trump. Moving on to European currencies, we can see the euro has been trending lower both against the dollar and the pound. It has started to edge up early this morning. The euro did drop to a 6-week low of 1.1715 yesterday, and a 10-week low of 0.8743 against the pound. The euro, apart from the fact that the ECB doesn't appear to be as fast as had perhaps been anticipated in terms of scaling back starting to scale back its asset purchase program. We also had the election shock out of Germany, where Angela Merkel failed to win a majority, and we've seen the first signs of her attempt to form a coalition with junior parties such as the FDP and the Greens. She moved her finance minister to become the Speaker of the Bundestag, and this has raised speculation that she will potentially offer that job to in order to attract one of the prospective coalition parties, the FDP and the Greens, by offering them that role. Moving on to the pound, sterling hit a 2-week low 1.3346 against the US dollar a short while ago, although it has since turned higher. Yesterday we had the Confederation of British Industry published their retail sales index for September, which rose to 2-year high. We also had hawkish comments by the Bank of England's chief economist Andy Haldane, who said that a rate rise in the UK would be seen as a good news story for the UK economy, and he also was rather optimistic about wage growth in the UK. We're going to have Mark Carney speaking later in the day. The Bank of England is celebrating 20 years of independence since the Tony Blair government made the bank independent back in the 90s. Theresa May will also be speaking during that conference, as well as Fed Vice Chair Stanley Fischer, although we don't know whether or not Theresa May will be commenting on Brexit. Let's look at the Aussie and the Kiwi now, because both currencies continue to face downside pressure from the resurgent greenback. The Aussie hit a 2.5-month low of 0.7797, though it has since recovered just above the 0.78 handle against the greenback. The Kiwi hit a 3-week low of 0.7165 after the Reserve Bank of New Zealand held rates unchanged at 1.75% and was slightly more dovish than the previous meeting, although overall they maintained a neutral bias. The RBNZ was less optimistic about the growth outlook due to weaker construction activity and of course the political uncertainty after those indecisive election outcome that we saw over the weekend. But the Kiwi has managed to edge up a little bit now. It's currently trading around 0.7192. And looking at the Canadian dollar now, we can see the loonie has been declining since mid-September. We can see USD CAD rising sharply mainly due to on the back of the more bullish US dollar. Yesterday we saw the governor of the Bank of Canada, Stephen Poloz, sounding a bit more cautious than his previous speeches. He said monetary policy will be data dependent. So this led analysts to pare back their expectations of another rate hike by the Bank of Canada this year. We've already seen 2 rate hikes this year, one in July, one in September, and it's looking less likely now we will see another one over the coming months. So the Bank of Canada could be on pause. So that drove the loonie to a 1-month low of 1.2519 per US dollar earlier today. And also it's surprising that we haven't seen much of a boost from the strong gains in oil prices in recent days on the loonie, as the receding rate hike expectations by the Bank of Canada and the stronger US dollar have offset much of those gains from stronger oil prices. Looking at today's economic calendar, we're going to have Eurozone economic sentiment data coming up shortly, as well as flash inflation numbers out of Germany for September. In the US, we're going to see the final estimates of US GDP for the second quarter, and of course the weekly jobless claims, and those speeches by Mark Carney and Fed Vice Chair Stanley Fischer later in the day. That's it from me. Thank you very much for watching, and have a great day.